Hi dear students, good afternoon. Today we are going to discuss the concept of the cash book. The cash book is basic concepts what we need to prepare the bank reconciliation statement, because in the next topics or in the next lectures we are going to discuss the concept of the bank reconciliation statement. So before starting the bank reconciliation statement, we need to know what is the concept of the cash book. And here we are discussing the cash book, which is called as the two-column cash book. Two-column means what we are going to discuss here. So there is a 2 or 3 basic things you should understand before going to understand the concept of the cash book. First of all, the cash has 2 options. The cash can be in the cash in hand or it can be in the cash at bank. So for that purpose, we want to know that how much we have cash in hand at the particular time, and especially at the end of the financial year, and how much we have cash at bank. So again, we want to know either it has a debit balance or the credit balance. So for this purpose, what we need to understand the concept of the cash book. If we look at the cash book, just like a simple account, the T account, it has 2 basically sides. One is the debit side. Debit side means what? Where we will record all the receipts. Okay, means how much cash we are receiving, either it is in the cash account or in the bank account, cash in hand or cash in bank. We are writing it on the debit side, just like a T account or just like a ledger. Now we have a second side, that is the credit side. So where we will write all the payments. Okay, payments either from the hard cash we are paying, or we are paying from the bank, cash in hand we are paying, or cash at bank we are paying. So all the payments will be written here. So we have a debit side, the receipt side, and then we have a credit side, that is the payment side. So there are 2 main things are there which we have to record, either the cash receipts and the cash payments, and then we have to see that how much is the balance. So the closing balance of the cash in hand and the closing balance at cash at bank. So now if we are preparing the cash book, so we are writing the cash here on the debit side and the cash also on the credit side, so the receipts and the payments. So just like other accounts, just like other ledger, we have an opening balance. So we just assume that on the January 1st, the opening balance is there. Let's say 5,000 amount is available in the cash in hand and the 10,000 amount available in the cash at bank. So this business has cash in hand available 5,000 on the 1st January, and they have a $10,000 in the bank account. So this is what, this is the opening balance of cash in hand as cash at bank. Now we will record all the transactions which are related to the receipts and also related to the payments. Now, what are the sources of the receipt from where we can get the cash? So the first source, the main source is what is the sale. We have a cash sales. Okay. Now the customer may be depositing the money into our bank account, or the customer is paying directly the cash, the hard cash to us, so into the business. So it means what we are receiving from the customers in the form of the cash in hand or cash at bank, so that will be written on the debit side. Okay, let's say on the 2nd of the January there is a cash sales. A cash sale of how much? Let's say 7,000. It means it is written only in the cash in hand because the customer has given the hard cash. Now, for example, on the same date, on the 2nd January, you have paid the salaries. And the salaries are, let's assume, paid $1,000, but paid through the bank. So it means we have $10,000 in the bank account, and on the 2nd, the business has to pay salaries of $1,000. So that $1,000 from the bank you have paid. So 10,000 is available in the bank and 1,000 is paid from the bank. Okay. In the same way, we will keep on recording different type of the cash receipts. For example, on the third, there is some account receivables or debtors. For example, Mr. X has paid, let's say, $3,000. Okay. On the fourth, for example, again one more person who is a debtor, Mr. Y, they have deposited the money into the bank account, let's say $5,000. Means we have to receive a money from the customers, which was our debtors, which are our receivables. So we have received 3,000 on the third. So that is the cash in hand. We have received the hard cash. Now the debtor, Mr. Y, has not given us the cash. They have deposited the money into the bank account. Now here we have to consider two or more different things are there. There is a possibility that the customer is directly depositing the amount into the bank. So we are recording it here. There is one other possibility is there that sometime customer is not depositing the money in our bank account. They are giving us a check. They are giving a check to the business. So in that case, again, the check will be considered as the cash. Now, in that, we have to consider either we are keeping that check with us or we are depositing that check into the directly bank account. So in that case, there is a bit, you can say the technical transaction is there. If we are keeping that check with us physically, so that will be considered in the form of the cash. And when we will deposit that check, the customer's check, we will deposit into the bank, then it means we are depositing the money into the bank, but we will reduce it from the bank account. Okay, so the cash account, the hard cash account, the cash in hand will reduce and the cash at bank will increase. So in the same way, there is a possibility that you are paying the customer through the check. For example, you have paid the salaries 1,000, so you have given the check to them. So in the same way, there is a possibility the customers are giving you the checks or you are paying through the check. So there is a possibility. One more transaction that is important here, so we will discuss later on. So that is related to you may be depositing the money that you have cash available in hand and you are depositing that money into the bank account, or you are withdrawing the money from the bank account. So both possibilities we will consider. That is called as the contra entries, which has an effect on both sides. Mean the cash in hand is increasing, or at the same time cash at bank is decreasing, or the vice versa, that the cash at bank is increasing and the cash in hand is decreasing. So let's say, for example, we are considering that the customer has given you a check. The customer has given a $1,000 check. So normally we consider that check we are receiving and we are not keeping it with us. We are directly depositing that check into our bank account. So that's why we are considering it directly bank account. So we have account receivable, debtor, Mr. X is there and they have given you the check. So we can write the check number 1001. So that amount we are considering that we received a check from the customer and we have directly deposited that check immediately into the bank. Let's say it is $4,000. So that amount is directly deposited into the bank. Now there is a possibility, for example, on the 10th you are paying some rent. Rent maybe you are paying in the form of the cash. Let's say $4,000 you are paying the rent expense. This was the salary expense and it is the rent expense. So here it will be zero because the salaries you have paid through the bank, so the bank is credited. The rent you have paid in the form of the cash in hand, so that is credited, but only cash in hand will be credited. Now we will discuss the concept of the contra entry. Means There is a possibility now, if you see, we have almost 10,000, 5,000, 4,000, we can say almost 19,000 cash is available in the bank. We need some cash for the office purposes. So what we can do, we can withdraw the money from the bank. So that amount we are withdrawing from the bank, but that money we are just, what we are doing, we are depositing that money into the bank account. Now we are withdrawing the money from the bank account. In the same way, there is a possibility we are withdrawing the cash account and we are depositing into the bank account. So the vice versa transactions are there. Okay. So for example, we are withdrawing the amount from the bank. Let's say $1,000 is withdrawn from the bank. Now we are depositing the money into the bank, or we are withdrawing the money into the bank. So in that case, we have two effects on the cash book: cash in hand and the cash at bank. Both will be affected. Now the cash is withdrawn from bank. Now $1,000 we have withdrawn. So same date, same transaction, that is bank withdrawal. Okay, how much we are reducing from the bank? $1,000. And with that we will write a C. Okay. Why we are writing a C with that? It means it is a contra transaction. Contra transaction means what? That it has two effects. One on the debit side and one on the credit side. That you have withdrawn the money for the business use, the cash in hand. So the cash in hand is increasing, so it is debiting. But at the same time, because you are withdrawing the money from the bank, so on the 16th, again you will write the same entry on the credit side, but you will credit on the bank account. So bank cash at bank is reducing and cash in hand is increasing. So these are the main things that we have to see. In the same way, for example, let's say on the 20th, we can do the reversal. Reversal means what? That you can deposit the money into the bank, cash deposit. For example, to bank. Now, if you are depositing the money into the bank account, let's say $2,000 you are depositing on which date? On the 20th. So the bank account is increasing. Or the same transaction you will do on the credit side also, because what is happening? Because it is a cash deposit. How much? That is, cash is reducing. How much reducing? By 2,000. So it is again a contra transaction. So we will write here C with that for the understanding that it has a two effect. Cash in hand is reducing, cash at bank is increasing. So again, like a previous transaction where we are depositing the money into the bank account or we are withdrawing the money from the bank account. So we have two effects, both effects on the cash book, one on the debit side, the same effect on the credit side, but the bank in hand, cash in hand is increasing or cash at bank is decreasing. So in that case, we will write either on the debit side or on the credit side, depending on the type of the transaction. Now, one more thing that is possible while dealing with the banks, so that is the bank charges. Now, bank is charging, for example, bank is charging for the ATM, bank is charging for the checkbook, you may be taking a loan from the bank, so bank is charging for the interest. So all these monies the bank is deducting from our account. Okay, let's say on the 25th, for example, there's a bank charges, for example, for the ATM or any other services, bank is charging us, let's say, $50 or $500 or $100, any assumed value, let's say $100 bank is charging. So in that case, what will happen? The bank account, the cash at bank account is reducing by $100. So this is what, this is the ATM charges bank is taking from you. Bank is simply deducting that amount from your account. So you are crediting the bank account. So the amount, the deposit amount, because your asset is decreasing, Okay, so it is a bank charge or bank expense, simply you can say. So expense is debit and the bank account is credit. In the same way, for example, there is a possibility sometime when you have a money in your bank account, especially in the saving accounts or the fixed deposit account, the bank is also giving you some interest. So it is income for you. Okay, if there is an income for you from the bank, so what we have to do, we have to increase the bank account. Let's say there is an interest income forward, that is the fixed deposit you have in the bank. From the fixed deposit, the bank is giving you $100 as the income, so that is what this is will be debit. So 100, 200, just for the sake of purpose, we make it a $400. So you have a money in the bank account. So bank is doing what? Bank is giving you some of the income because it is an income for you. So bank is giving you some of the favor, some of the benefit because you have deposited in the fixed accounts like a saving account. So bank is sharing their profits with you. So $400 bank is increasing in your account. So bank account will be debit. So cash at bank is increasing. So here if you see, we have a different transaction, like we have opening balances, cash sales are there. So again, for example, on 29th, you have to pay to the, let's say, to the account payable. You have a creditors. For example, Mr. P is there. You have to pay, let's through from the bank or from the cash. So it depends on the transaction. For example, you are paying $5,000 through the bank account. You have paid to the Mr. P. Even you have to write the check number, that which check you are depositing, we have written here. In the same way, we can write the check number we are giving to the supplier. For example, if it is 1002, the check number we are writing. So all this detail will be written. So all the receipts what we are receiving into the cash account, cash in hand account, or the cash at bank account what we are receiving, we will write here. And whatsoever we are paying, either paying cash in hand or paying through the bank, so all the payments will be there. So this is the way how we are writing all the transactions related to the cash in hand or cash at bank. So, and also we have discussed the contra entries. Contra entry means what? That, for example, you are depositing the money into the bank account from your cash in hand, or there is a possibility you have a bank account, the balance is there, and you are doing what? You are just withdrawing the money from that account. So those transactions, either you are depositing your hard cash into the bank account or you are withdrawing the money from the bank account. So in both cases, these are called the contra transactions. So we have already recorded, we have already discussed the contra transactions. So these are the concepts that we have discussed today. Now after that, what we have to do, we have to, just like a balancing, just like a ledger balancing or the account balances, we have to see that how much is the debit side, how much is the credit side, and we have to find out the balance. Now, for example, if we see here 7 plus 10, 15 and 16,000 is there. On this way, we have almost 6,000. So we will write here like a 16,000 total is there. So 16,000 is the total as a receipt. So it is just for the understanding purposes I am telling you. Otherwise, we have a proper method is there. So 16,000 is the total. Receipt is there, and if you see the cash in hand, the total payments are 4,000 and 2,000. So the 10,000 is there. So 10,000 is the balance. Okay. So we will write here like a balance. The closing balance of this month is how much? That we have 10,000 rupees or $10,000, whatsoever is the currency. So 10,000 is the amount that we have in the form of the hard cash. So we have received like almost 16,000 and we have paid how much? 6,000. So the 10,000 is the balance. So here also it will be 16,000. So 10,000 is what? 10,000 is the balance in the cash in hand. Now we will see that how much we have balance in the cash at bank account. So we have a 10 plus 15,000, 19,000, 21,000 and 4,000. So this amount that we have received And in the same way, we have paid 1,000, 1,000, 5,000, 100. So we will see here how much total receipt is there. If you see here 10, 15, 19, 21, 21,400. So 21,400 is the total. And if we look at the amount here, so almost 1, 2, 5, 7, 7,100 we are paying. Okay, so 7,100 we are paying, so it means 14,200 will be the balance. 14,300. So the cash at bank, we have a balance of 14,300. So this will be the balance, what we say the closing balance for this month, means for the month of the January. We have a receipts, we have a payments. At the end of the month, we have a closing balance of 10,000 and 14,300. So this will be what, this will be the opening balance for the next month. So all the receipts are recorded just like a debit and credit. All the payments are recorded on the debit and credit. If there is any transaction which is affecting both cash in hand and cash at bank, it is recorded as the contra account. Then if there is any expense by the bank, or if there is any income from the bank, so we are recording it as an income, or there is a possibility of the expense from the bank, like a bank charges, ATM charges, or maybe checkbook charges, or any other taxation the bank is deducting. So all that will be deducted. So in this way, we will write all the transactions and we will calculate the closing balance both for cash in hand and cash at bank. So this is how we are preparing the cash book, the 2-column cash book. Why we are calling it 2-column? Because it has both the column cash in hand and cash at bank, and we are calculating the balance of these both columns. I hope you have understood the concept, and still if there is any confusion, you can ask me in the comment section. Thank you very much.